Hey everyone, Charting Man Dan from ChartGuys.com. You know, behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education. Hello everyone, checking in on the tech sector, and we finally pulled back, and I'm going to call this a mini bubble. We saw a month of straight upside. We saw one bearish day. Every other day, the bulls are buying the dip and closing at the high. This is not sustainable, and everybody took profit at the same time. And everybody's giving the excuse of Trump. I don't buy it one bit. We had the information when we were at all-time highs. Just an excuse, just a reason to tell average Joe what's going on and try and get them to understand, when in reality, it's just trading psychology and human emotions at play. So we saw a gap down and a dump. We closed at the low. Shorts did not cover, and we're looking at a potential gap down again tomorrow. There's a gap all the way down here at 53.31. There's plenty of gaps all the way down to be watching as targets. And a short-term target that I'd be watching is the low of this consolidation day, the weakest day we've seen in the last month. Besides today, that was 53.97. So that's a support level to be watching. I've been saying in these videos, once the tech sector pulls back, that's when the S&P 500 is going to pull back as well. It's been holding the market up, with its biggest holding is the tech sector in the S&P 500, and now it's catching up. So bears in control, keeping things in perspective, we can pull back very significantly, another $3 or another $2 to the downside, and still be forming higher lows. Bulls must hold 52.33. Anything above that is a higher low, and we stay in an extremely strong uptrend. So keep that in mind. Perspective speaking, it's very bullish still on the weekly time frame. Daily time frame, bears have full momentum, no doubt about it. Watch the hourly RSI levels. If we see a gap down open tomorrow, we're going to be extremely extended to the downside, and we would be looking for a short-term oversold bounce for a day trade. Apple bears finally taking over in the short term, breaking down to lower lows, and we're having support of 149.71. The daily middle Bollinger Band is going to be in the mid 148s. And then the next level we would be looking at would be down at 148.42, 145.21. So same thing for Apple. We've seen such a move to the upside. We have so much wiggle room before we would break this uptrend. 139.48 is the level to hold. So that's a $10 drop. We can drop $10 and still be in full control by the bulls. So you better believe that longer term bulls looking years out from now are going to be looking to buy this dip. The question is going to be, when do the bulls show up? And as of right now, we didn't see them at the end of the day today. And seeing the big bull move we've seen in the past 2 weeks, we've given back about half of that bull move right now. So keeping things in perspective, bulls in full control of the long term, bears are in full control of the short term. Facebook, bear break of our equilibrium pattern finally happening. It happened right at the open, and it was all downside from there. Facebook was one of the lead tech bears to be playing to the downside if this pattern broke when the tech sector consolidates, and that's how it played out. So support from here, there's a little gap at 144.17. The 50-day moving average is going to be right up around that level, and we close very weak. Same thing with Facebook, however. We can pull back. Anything above 138.81 is a higher low. We can pull back $5.50 and still be forming higher lows in a very strong weekly uptrend. So the bears are in control of the short term. The bulls own the long term still, and we have key supports of consolidation to be watching on every individual name. And because of the move since the election, most individual names are holding their uptrend on the weekly time frame fairly easily still at this point. So we'll see if we get another gap down open tomorrow. Watch those hourly RSIs. We'll check back in after it all settles down at the end of the day, and I hope you have a good rest of your night.